Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Friday, September 26, 2014. Daily chart of the SPY. Let me move this over, and you can see an update today. So, all in all, let's roll back the tape a little bit and just refresh where we were and where we are. So, leading up into this week, okay, we had options expiration last week, and leading into this week, the market was making a high, and we kind of said, I know in one of these videos I said it was a sell Rosh Hashanah type of thing, right? And we got that, and frankly, I thought the market would kind of be quiet today, but all in all, we had a pretty decent up day. And what happened was it was quiet. It was actually weak in the morning. But what happened was, let's take a look at the intraday chart. Okay, here's a 10-minute chart. And the market was weak this morning, all right? We're back. Where are we? We're back here, okay? So we're weak this morning, and then all of a sudden this afternoon we decide to take off. And this is actually forming a bullish pattern, wants to go higher, probably wants to go up to 199. But let me show you what really happened today, okay? Because whatever the reason was for the rally, throw it out the window. Because here it is, okay? This is the recent high. That didn't come out right. Bear with me. Let's do it again. Here's the recent high. Well, I don't know what's going on here. All right, for some reason, I can't get the Fibonacci retracement lines working. It must be a problem with the software. They were working before, but I'll have to call eSignal and figure that one out. All right, so basically what I wanted to show you is from this high, okay, at 201.90 to this low, and you can do the math if you want on your own, or you can draw on your own Fibonacci retracements on your own charts. Here's what you're going to find, down to 196.24, all right, where we went today at the high, we pierced through the 382 retracement, okay? So as we started to get there, it should come as no surprise that we were going to go there, and why? Well, these pivot lows here were important, okay? You had some consolidation here, and your 382 retracement was this pivot to this pivot, and 382 of that is right where we pierced today, and I think it was right in this level here. So that's market symmetry at its finest. Let's go back to the daily chart. So here's what we're going to find. Okay, let's just cut to the chase. You're going to have a couple of things at work. As long as you stay, let's use two levels. As long as you stay below the 50-period moving average, the blue line, okay, and you make a sideways pattern here, you're going to have lower prices, right? You're going to go sideways for about a week and then go down, all right? Or as long as you stay inside this red bar high at 199, let's get you the exact number, 199.05, as long as you stay inside this red bar, okay, and you go sideways, you go lower, okay? However, if you take out this red bar high, all right, you go up farther, so you could have a pattern that looked like this, up and down, or you can just go up, and we've seen that happen before. So the market's at an inflection point, so we don't want to, guess, and we don't want to hope the market does something. We'll just see how the pattern takes hold, and whatever it is, it is. I will tell you that the month of October, and you'll hear this a lot on TV, you hear September's bad, October's bad, but in particular, October, there are two solar events. There is a full eclipse and I think what they call a partial eclipse. One falls on the 8th and one falls on the 23rd. Now, they'll usually, just like we saw in the past, okay, with the fall equinox, not the same thing, but those type of astrological solar events tend to cause turning points in the market, okay? We don't care why. It just seems to happen. So we're going to be on the lookout for that, and if the first one's on the 8th, okay, and we make a sideways pattern this week going into the following week, then I would say we'll probably turn down. We'll see when we get there, but that's kind of what I'm looking at in the S&P. Let's jump over to the IWM because something interesting was developing on the IWM. I'll just type it in. Okay, so the IWM, I think we saw it on the weekly chart, did we? We saw a head and shoulders pattern. Yeah. Okay, so I didn't save it from yesterday. I should have saved it. So we draw a line in, okay, and basically we have a head and shoulders formation that we broke below yesterday. And we broke below it yesterday and we kind of retraced back to that level today. Now, I don't know if this line's exactly on it. I just, for conceptual purposes, I draw it in, okay, and then we can see that we retrace back to that line. Okay, now if we close above that line, all right, Monday, Tuesday, whatever it is, this head and shoulders pattern's off the table, all right, at least for the time being. But if we stay below this line and we go sideways, all right, so let's just say, let me get rid of, I'm sorry, folks. I wanted to move over the chart, and there. So if we go sideways, okay, below this 20-period moving average, then we'll go lower. And the next stopping point is going to be only at 108 from here, okay? These pivot lows here, this pivot low. That's the next stopping point. But if we break below that, you can go all the way down to the 200-period moving average. Not all at once, but you know, there's not a lot of support before that happens. You know, some in here at 100 for sure, but you could get as low as 94. That's all I'm saying. Okay, so we'll see what happens there. We'll play it by ear. Let me see my notes. Okay, gold market. We want to go over to the gold market. Now, gold's in an important point because this week was an important week. It had to close. Gold had to close, in my calculations, above, let's say, 1216 in order for it to remain in a strong position and a move up to 1240, 1250. That's really what I'm expecting. Could go higher, but I don't think so. So we did close above that level. So I think next week we could see a move up in gold. I think it'll be sharp. I think it'll be fast. I think it is something that could be sold. If you're long gold, take the ride and take some off. Once we get to about 1240, begin to take some profit off the table and trail your stops. That's what I'm expecting for gold. Following that, okay, I think that that gold is going lower, and I know people don't like to hear that, okay, but those are what the numbers are telling me. I don't care what the equity is or what the market is I'm analyzing. I just read you the charts, read you the numbers, and that's what I'm seeing. And if you go on a monthly basis, let me show you what I'm looking at. There's two things at work here, okay? Number one, all right, you basically, from a low point, let's squeeze this together a little bit, and let me show you something, okay? I'm going to just take from this low. All right, well, let's see if it works. It didn't work last time. Hopefully it'll work on this chart. All right, no, it's not working. All right, for some reason it's not working. But if you take this low here at $41 up to this high at 185, okay, 185 minus 40 is 145, okay, that's the total move. 1/3 of 145 is what? Let's see, it's almost 50. It's 40, we'll call it $48. And the pressure of doing the math fast without a calculator and on tape is killing me. So call it, about a third, or let's call it a 382 retracement for argument's sake, puts us in this zone here, 140 to 150 in that neighborhood, and the 50% retracement puts us in the 120 to 115. It's actually, I think, about 113 area without having the scale on my chart. I'm kind of eyeballing it, and I'm pretty sure it's about 113, give or take. So we're right there now. We're at the 50% retracement of this total move up in gold from back in the day when it was $200 an ounce, the price of gold. Okay, GLD chart doesn't go back that far. Well, I have a gold chart. It doesn't matter. The point is that we're at a 50% retracement. But, okay, here's what you have. You have sideways action, sideways consolidation for a couple of years. I'm sorry, for the whole year. This is a monthly chart. For the whole year, year and a half actually, almost. So it's over a year. So what is this? This is July. This is June. Yeah, June of 2013. So yeah, it's about it's a long time. It's about 15, 16 months of sideways. So if we break below this low, it's good night, Irene. And if we stay above it and we can rally, we have a chance for a rally, but I just don't think it's coming. That's just my take, folks. I know nobody wants to hear this about gold, but that's my take. I know it's long drawn out on gold. Wasn't that great of an analysis. What I'm trying to tell you is be careful. The gold bugs, just be careful. Don't look for excuses to own gold. Don't look for all the reasons about inflation and all that jargon. It just looks like it's going down. Just leave it at that. And if I'm wrong, I'm wrong. That's fine. If you own gold, for your sake, I hope I'm wrong. All right, next up, let's take a look at oil. We'll look at the USO, and then we'll give it a wrap for tonight. One more thing I want to discuss, though, before we go after oil. So here we have, let me get this back the way I like it. All right, here we have the USO, and last night I drew in a trend line for you, okay? Let's draw it in again. It's important, all right? Now, this trend line, okay, I said that gold was going to have a tough time getting through this, oil was going to have a tough time getting through this trend line. Again, we do that. Pardon me, folks. Okay. So basically, it pierced that line, and mathematically, it might have closed above that line. Let's see. Yeah, it looks like it closed above that line, but that's not a substantial close. Now, if it goes higher, your top level is going to be here anyway, 35.84. Okay, so right now we're at 35.16. You know, basically less than $1 away on the top end. Then I think oil's going back down. So if we come up to this level, I would look for a sell in oil. Guess what? Around that event on the 8th, the full eclipse on the 8th. If oil is up into the 8th on that full eclipse, it's a stone cold short. And by the way, the same thing goes for gold, not to harp on gold. Last thing I want to discuss is the dollar. I can't get the actual Dixie chart or dollar chart on this platform here, but this is the UUP, and it's interesting because I want to show you a longer term chart because this is important because this plays into everything else. Now watch this. You see how the dollar made a huge move, okay, starting in July. This is 1 month, 2 month, 3 month up. Now, the top end in the UUP is going to be about 23 to 23.15, all right? And the dollar is not much higher. The dollar closed today at 85.78. I don't know, maybe it's 86. Actually, if you bear with me, I have another platform on another screen. I'm going to do the same chart because I got the dollar. Just bear with me, and I'm going to show you or tell you what the same level coincides with in the dollar. And I can't because it's a December chart. Never mind. Sorry about that, folks. Okay, wasn't a continuous chart. All right. So basically, it doesn't really matter. It's not farther up from here. But here's what I want to point out. It's either going to pull back and take a breather for a while, okay? Or if you close the month of September, which is only into next week, early next week. If you close the month of September, okay, above this level, all right, that's wildly bullish for the dollar. That's my take. Okay, I've seen this before. Okay, we could get another rally in the dollar all the way through the end of the year if that happens. So we'll see what happens. A couple of days, we'll see how we close the month. And if the dollar continues higher, that could be a sign of why gold would continue lower, right? We know that they're not always correlated, but when they decide they're correlated, they're correlated. And gold has been going down and the dollar's been going up, and oil's been going down and the dollar's been going up. And if the dollar continues up, I would suspect that those two things will have pressure, oil and gold. And other commodities as well have been under pressure while the dollar has been rising. And by the way, what else is the dollar linked to? Okay, if we have a weak dollar here and other currencies are strong, okay, people from other countries tend to come here and buy assets because of our weak dollar. If our strong dollar, and a strong dollar, we're going to prevent them, indirectly prevent them from buying our assets because they're costing more. When our dollar was weak, okay, that's why foreigners were buying real estate here in the U.S. because our dollar was weak and their currency was stronger than the dollar. So they were getting a discount on our assets, whether it was businesses, whether it was real estate or anything else. It's a discount. Now that the dollar's strengthening, it's not a discount anymore. It's the reverse. Now they end up spending more than they want. So that has an impact on the economy. So all these things factor in. Anyway, I'm going to leave you with that tonight, folks. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis. Thanks for tuning in, folks.